Returning to my Coin Lady channel, I am pleased to see you again. Armies of XRP cryptocurrency. Great news! We have a lot to discuss today. There will be trillions of dollars flowing into the cryptocurrency markets as a result of institutional investors' full commitment. Now, this should come as good news, given that the Fed is cutting interest rates. I'll give you a rundown of when a lot of big things are happening, and there have been a couple of recent developments that will send shockwaves through the market. Do yourself a favor and watch the movie all the way to the finish. I guarantee you won't want to miss the surprise I have in store for you. The crypto community is aware of this, so let's dive in. So, I have some news to share with you all, and it's a bit of a mixed bag. Here are a few nice and a few awful. We now have Gary Gensler, who, as part of his latest X or Twitter acquisition, is attempting to have Elon Musk sanctioned. The silver side is that this ensures Elon Musk will be his primary target for the near future, even though he will almost certainly lose this fight. Plus, this implies he won't be giving cryptocurrency much thought for the foreseeable future, at least not for the foreseeable future, often. Taking into account what I am about to demonstrate to you and what has just been authorized, it is good news. First, MicroStrategy, whose CEO is Michael Saylor, has already spent almost half of the money it raised, so it's highly probable that Michael Saylor or MicroStrategy will soon launch another large Bitcoin buy. The company recently spent $458 million in Bitcoin. This happened on the same day that the firm announced it raised over $1 billion. The obvious next issue is why he didn't immediately spend all $1 billion worth of Bitcoin on the fur. Some are even taking the time to investigate this, reasoning that he will wait to buy again until he sees how the markets respond to his most recent investment. He will likely purchase that dip if a significant sell-off is imminent. And, yeah, it's a huge quantity of Bitcoin. It is indicative of the current condition of institutions that Michael Saylor can raise such enormous sums of money. What I'm going to show you, though, is significantly more optimistic than this. Here we are discussing BlackRock. We will be discussing all three of these financial institutions, Chase, JP Morgan, and Bank of America. However, I feel compelled to preface this by saying that there are some absolutely fantastic chances available at the moment. Ethereum offers a fantastic opportunity to be shorted at the moment if you are involved in cryptocurrency trading in any way. It is indeed extremely overbought on the weekly chart, according to the daily stochastic RSI. At the very end of this line is where it is. However, I do anticipate that Ethereum will see some down days in the near future. As a result, you have an opportunity to profit by shorting Ethereum's price. Similarly, Bitcoin currently offers similar buying chances. The orange and blue lines of the stochastic RSI have just surpassed the overbought zone, reaching an all-time high. Again, at the moment, shorting cryptocurrencies like Bitcoin or Ethereum is a fantastic opportunity. Now that we've covered it, let's move on to more institutional matters. After all, there are some wild things happening. The first is Tether, the reliable business that is present on almost all blockchains. This is the magnitude of cryptocurrencies, and I believe it's easy to forget that in 2023 they made more money than BlackRock. Wow, it's absolutely absurd that Tether USDT is outperforming BlackRock, an asset management with a multi-trillion-dollar portfolio. You are dealing with a crypto stablecoin company. We are increasing our profits at the world's largest hedge fund. Okay, so maybe BlackRock isn't cashing in on all of their profits, they might be making a lot more money, but $6.2 billion is still a very astounding sum. Alright, this is the crypto definition. The future appears like this. By 2023, we could already tell there was a $700 million disparity. One advantage, in particular, has resulted from this expansion, and that advantage is, of course, simply Tether. Still, I have to ask, how are they pulling this off? They are, in fact, purchasing bonds issued by the government. They're investing in Bitcoin. They also benefit greatly from price increases in Bitcoin and government bonds. In 2023, when Bitcoin was much cheaper, I purchased a ridiculous amount of it. Since then, its price has increased by more than 3 times. That was a brilliant move. This is simply. Clearly, Tether is enjoying all the benefits right now, but it does prove that dollar-cost averaging cryptocurrencies does pay out in the long run, particularly during bull cycles. Additionally, while we're on the subject of BlackRock, the SEC has been rather busy with approvals. They have actually given the go-ahead for BlackRock's spot Bitcoin ETF to trade, which is a huge deal because it means more people will be able to trade in the future and more volume could be generated by the spot Bitcoin ETF. Obviously, Bitcoin's price has been trending upwards since this news broke, though it did have a small dip. In any case, that's great news in the grand scheme of things. This will surely increase the liquidity of all cryptocurrencies, not just Bitcoin and XRP, in the long run. Plus, I believe XRP will gain a lot more value once. Naturally, exchange-traded funds, ETFs, enter the picture. We have previously witnessed how little XRP needs to truly get some significant price activity. Of course, it's also ridiculous to see news like this for Bitcoin. Because, honestly, you are not ready for what I am about to show you. I want to go a bit more into some of the truly absurd statistics we are seeing with institutions. Well, first of all, as of May 20th, the 10 funds had over $54 billion in assets under administration, and as a whole, professional investors had exposure to over $10.7 billion. I was surprised by how many people showed up, according to CoinGlass. For Fortune, it's ridiculous, according to Eric Balkan, a senior ETF analyst at Bloomberg. There's no way. The first 13 F seasons may be good if they were 10. That is the difficulty level. Who needs a 401 when you can have a 414? CoinGlass has just revealed data revealing that institutions are beginning to buy cryptocurrencies to the tune of $54 billion from 10 separate funds. This is essentially what they're referring to. Looking at MicroStrategy alone reveals, unsurprisingly, that they have a ridiculous fortune. Guys, this is simply in the crypto space. Between 2023 and 2024, there will be an unprecedented surge in institutional adoption. There is a tremendous disparity. Of course, we are observing BlackRock here. Our focus here is on Chase and JP Morgan. The unprecedented addition of cryptocurrency to their balance sheets is expected to continue at an exponential rate by 2025. It is difficult to predict how explosive that year will be, but one thing is certain: if these numbers continue to rise at this rate,